Every time someone buys oil anywhere in the world, they're paying tribute to a deal made 50 years ago in a closed room. Not because oil comes from one place, not because the dollar is backed by anything real, but because in 1974, two men shook hands and decided that every barrel of oil sold on Earth would be priced in American currency. No vote, no treaty, just a handshake that quietly made the dollar the most powerful financial weapon in history. 3 years earlier, the United States faced a crisis that threatened to end its financial dominance. For decades, the dollar had been backed by gold. Other countries could exchange their dollars for actual gold from American reserves. This system made the dollar trusted. It made it stable. But by 1971, the United States was printing more dollars than it had gold to back them. Wars were expensive, social programs were expensive, and other nations started to notice. France was the first to call the bluff. They began exchanging dollars for gold, draining American reserves. Other countries followed. President Nixon faced a choice: run out of gold or break the promise. On August 15, 1971, he chose to break it. In a televised address, he announced that dollars could no longer be exchanged for gold. The system that had supported global trade since World War II ended in a single evening. The dollar collapsed. Countries that held American currency watched its value fall. International trust evaporated. The United States needed a new foundation, something that would create demand for dollars without gold, something that every country on earth needed and couldn't refuse: oil. In 1973, Arab nations launched an oil embargo against countries supporting Israel in the Yom Kippur War. Oil prices quadrupled, gas stations ran dry, economies stalled. The crisis revealed something powerful. Modern civilization runs on oil. Electricity, transportation, manufacturing, agriculture, everything depends on it. Whoever controls oil access controls economic survival. The United States couldn't control the oil fields. Most were in the Middle East, but it could control how oil was bought and sold. And the key was Saudi Arabia. The kingdom held the largest oil reserves and led OPEC pricing decisions, convinced Saudi Arabia, and the rest would follow. In June 1974, Secretary of State Henry Kissinger arrived in Jeddah. The meeting was kept quiet. No press coverage, no public announcements. The Americans made an offer. Saudi Arabia would agree to two conditions. First, price all oil sales in dollars and refuse other currencies. Second, invest surplus oil revenues into U.S. Treasury bonds. In exchange, America would provide military protection, weapons, and a security guarantee against regional threats. The Saudis accepted. The agreement was never written as a formal treaty. No congressional approval was needed. No international body reviewed it. But the effects were immediate and total. Every country that wanted oil now needed dollars. It didn't matter if they traded with America or not. It didn't matter if their own currency was strong. To buy oil, they had to first buy dollars. This created a permanent global demand for American currency. Countries stockpiled dollars as reserves. Central banks held dollars to ensure they could purchase energy. International trade contracts were written in dollars. The currency that had just lost its gold backing became more essential than gold ever was. The second part of the deal was just as important. Saudi oil revenues were enormous. Instead of spending that wealth on regional development or investing in other nations, the Saudis bought U.S. Treasury bonds. This meant they were lending the money back to America. The United States could run deficits, fund wars, expand government spending, and the Saudis would finance it by recycling petrodollars into American debt. Other oil-producing nations followed Saudi Arabia's lead. OPEC adopted dollar pricing. The petrodollar system became the foundation of global finance, and the United States gained something extraordinary: the ability to print the currency that the world needed to survive. This is why American sanctions are devastating. When the U.S. blocks a country from the dollar system, that country struggles to buy oil. They can't trade easily. Their currency weakens. Their economy contracts. The dollar isn't just money, it's access to energy, and America controls the access. The system also means the United States can run massive trade deficits without consequence. When other countries run deficits, they face currency collapse and inflation. But when America imports more than it exports, those dollars return through oil purchases and treasury bond investments. The money comes back. The cycle continues. For 50 years, this arrangement has held. The dollar remains the global reserve currency, not because of economic strength or gold reserves, but because of oil. Every tank of gas, every barrel of crude, every petrochemical product reinforces the system. The 1974 deal didn't just save the dollar after Nixon ended gold backing. It made the dollar more dominant than the gold standard ever could. But the foundation is starting to crack. China has begun trading oil in yuan. Russia accepts rubles and other currencies. Saudi Arabia has quietly discussed pricing oil in alternative currencies. The economic leverage that seemed permanent may not last forever. The handshake in 1974 wasn't about friendship or shared values. It was a transaction. America offered military power, Saudi Arabia offered monetary control, and the rest of the world has been paying for it ever since.